Hey, rich friends, it's your girl Cha-Cha, recording live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So if that's something you're interested in, make sure that you subscribe, leave a thumbs up, leave a comment, let me know what you learned, but more importantly, share this video with somebody who you thinks that it will be helpful to. If you find that the videos are not enough and you are still interested in personal mentorship, you can find information down below in my description box. So in today's video, we are going to be doing a live chart analysis on TradingView using some of my favorite indicators. And also we will be taking some questions from the chat for anybody who has questions along the way. So first and foremost, I will be using TradingView to analyze. And if you guys are, you already have your TradingView chart set up, that's perfect. But if not, I'll go through my indicators and some additional indicators that you can use to help you find confirmations. So before I get started, does anybody in the chat have any questions about indicators that I've been using on my chart or any indicators that you want to review? Just let me know. If not, this is pretty much going to be a recap and a trade analysis of our first trade idea for the week. All right, so it doesn't like I have any questions in the chat, so we are pretty much going to move on. And again, this is going to be a simple review. This is just what I do every single week when I'm trading. And I will give you guys alternative things to look at. If you're using the free version of TradingView, you can use up to 3 indicators on your chart. But once you have the paid version of TradingView, you can have as many indicators as you would like. So typically on my chart, you guys will see 2 EMAs because I like to use the 50 EMA. And I also like to use the 200 EMA as well. So if your chart is not set up, I'll just simply walk you guys how to set up and how to use these indicators. So first, the 200 EMA is already on my chart. I just went to indicators and then I just typed in EMA. And it comes up as moving average exponential. So you can just click on it and it'll pop up on your chart. Now you can have as many of these as you like, but if you're only using 3 of the free indicators, you can choose either the 200 or the 50. So to change this, you would just simply go to your settings. On the settings gear of the indicator that you want to change what period you want it to be, and change the method to exponential. And this is something we reviewed earlier in Jeopardy. We have the simple EMA, we have the exponential EMA, we have the weighted EMA, and there's a few different ones that you could use. Now, because I've been analyzing my trades on higher time frame, the average that I'm looking at is going to be over the last 200. And this, again, this could be days, period, like 200 days, 50 days. But if you're somebody who likes to scalp and you don't really like looking at your chart beyond the 1 hour, then you, of course, have the option to change your EMA to something smaller so that you're analyzing data over a shorter period of time instead of a longer period of time. So, for example, I could make this a 25 EMA and I could make this a 10 EMA, right? And you're not going to notice much change, but the number that you change it to really just tells you how tight, right? That, as you can see, it got tighter, right? And because this is our time frame, it is telling us a little bit more information about the shorter time frame versus the longer time frame. But me personally, I just like higher averages, so I'm just going to change it back because I feel like the more data you have, the more precise your entry can be. So we can see that. Now, some tips about the EMAs that I've noticed that I like to use when I'm trading. And let me just hide these for a second so we can focus on one indicator at a time. Because we've reviewed these things 100 times, but it's like the more you know, the better of a trader you could be. So the first shortcut of how you can use the EMA, right, or the EMAs, depending on how many you have on your chart, is the EMAs will be used as either support or resistance, depending at where it's falling on your chart. Now, support is the area where the market tends to reject. Oh, sorry, I'm drawing on my own chart. Support is the area where the market tends to come down to, and then every time it gets close to that area, it goes up, right? So support is usually found at the bottom. Now, what you guys will notice about these EMAs is that when the candles are falling above the EMA, right, or the EMA is beneath the candles, whichever way you're looking at it, that EMA is actually used as a support, right? So if we were going for a buy, we would want the candle to be, I personally like to get into the trades when the candles have freshly crossed above the EMA, because I know that it has just touched the support and most likely is going to continue in that area. So even if I am seeing something like this, right, even if I am seeing some consolidation and this is over a lot of hours, I know that the market is most likely only going to sell back down to the EMA, and then it's going to turn around, and it just continues to do that so many times. So we had the market, and again, this is my favorite time to enter, and I'll talk about that next, using the EMA as an entry point. I don't think I have a video on that yet specifically, but we can see that the market crossed above, not one, but both EMAs, right? Then we had a little bit of noise here, right? The market came close to the EMA, and then it went up again. It came close to the EMA, and then it went up again. It came close to the EMA, and it went up again. So this is a trick you can use for the EMA, right? If you find that, and let me see if I can replay this really quickly. Let me see. I should be able to. All right, so we're going to go back to this point in the market, and I'm going to turn these indicators back on too. So let's just say we were in the market. Actually, I'm going to be a little bit after this. Let's just say we were in the market at this time, right? If I was seeing something like this, I would say, okay, this market looks like it could potentially sell, right? But even if I was going to sell, right, because we have the confirmations we need for a sell, we have that liquidity and resistance up here, right? And liquidity or resistance is just, you're just going to see a bunch of wicks in the same area. So we have that. So this is a reversal trade. We have our momentum line. It's kind of facing down, and it looks like it's about to cross below zero. But then we also have our stochastic facing down. The orange is above the blue. So these are all great indications for a sell. However, we know that this market is still above the EMA, so we don't want to get tricked. So what we can do, right, and this is, I used to like to take short sales and short buys more, but now I'm just in it for the long-term gain. So what I would do is I would do a short-term sell, right, because all the confirmations on this smaller time frame tell us we can sell. So I would do a short sell back to the EMA, right? Or what we tend to do a lot in the chat is we'll take a pending order. And when I'm setting my pending orders, what you guys will notice is if I'm doing a pending order for a buy, right? Because this is tricky, right? We know it's going to sell down to here, but we also know that if it's above the EMA, no matter what, y'all, the market is going to turn around and buy. So I wouldn't try to buy right here and then set my stop loss here, because that's how we're going to get stopped out. When I'm telling you guys, when I'm dropping trades in the chat and I say market execution, that's getting in as the market as is, because I feel like it's going to buy. But if I'm setting a pending order, most likely I'm just waiting for it to retrace for a buy back to the EMA. So we're going to go ahead and press play on this trade, and we're going to see if the market actually came back down to the EMA and then started to buy, which we kind of know that that's what happened. So let's press play and see if the market comes back down to the black line. I mean, to the blue line. Okay, so we can see that it actually did, right? We can see that it actually did. Now, it did take some time, and I know it could be confusing. Let me stop this. Oh, sorry, y'all. It said my screen sharing was paused. Let me replay it for y'all. I don't know how much of that y'all saw or didn't see. I don't know why it was paused, but I was looking. Sorry, y'all. I gotta go back to that place. Oh, you saw it? Okay. It said my screen sharing was paused, so that was a little suspicious. All right, so let me just play this and let it play out. So pretty much what I'm trying to say is that the EMA, no matter whether it looks like the market, hurry up. Sorry, I'm trying to end this replay. So no matter what, and I don't want people to get confused when they're trading, even if it looks like the market is having some consolidation, right? It will consolidate above the EMA. That's another tip you can use for the EMA. When the candles are consolidating, right? Let's say the market was previously, sorry, I'm trying to find a good example. All right, this is a really good example. Let's say even if we was only using one EMA, because you may can only use 3 free indicators. So I'm going to turn this one off. So let's just say the market was doing this, right? The market was consolidating. This could be confusing because you will look at this and you would say, okay, the market is consolidating, the EMA is moving sideways, but my stochastic has crossed down, right? You may be like, all right, I'm just going to take this trade for a sell just because you have all these iffy things. But one thing you should not do is if the market is iffy, just don't take the trade, right? And this is why I say there's a difference between your confirmations and your trade confirmations and your entry and your exit confirmations, right? So if I was at the market, if I was looking at the market right here and the market was here, it was indecisive. Well, I got to pick a particular candle. Let's just say I was looking at this candle and the market was indecisive, right? It's below the EMA. However, I can see that my momentum line has finally chosen a side, right? So that's a confirmation that I need for a buy. It's literally was right here. It was on the line. Don't ever make or feel like you have to rush into a trade because you just have to trade. Wait until you get everything you need. So we can see the momentum line made its decision, which is perfect. We're getting more of a bias for a buy. Then we can also see the same thing on a stochastic, right? And now I'm going to go into detail, just as detail about the on stochastic as I am about the EMA as well, because the stochastic, you literally can learn at least 20 things from this indicator alone. So even if that's the only indicator you want to use, it's telling you a lot. But on a stochastic, I see that my blue line is on top of my orange line. That's one confirmation for a buy. I see that my stochastic is facing up. That's 2 confirmations for a buy. I see that my stochastic has crossed above the 50% line. That's 3 confirmations for a buy. So all I really will be waiting for, right? Or if I'm waiting for 2 things, I will be waiting for, and you guys can let me know in the chat, if the market was consolidating, right? And it's finally chose a side on my momentum and my stochastic, which entry signal can you guys see? There's actually 3 entry signals that we can see that would tell me it's okay to enter into this trade. What we wait for, right? And I could actually back it up for you guys too. If we were in this right here, what will we be waiting for to let us know that the market, that we want to take this trade for a buy? Okay, we got the candle, we got the cross up, right? And all of these things are correct, right? All of these things are actually correct because we can see that once the market is right here, we can see, and this is what we were talking about earlier, the break of structure. The market was consolidating, which means that it wasn't really buying or selling. It was moving sideways. And then we had 2 things happen, right? Well, you guys got all the right answers. We have this candle right here, which is the break of structure candle on the upside, right? And simultaneously, while the market was breaking structure on the upside, it was also crossing above the EMA, right? So those are 2 things, 2 like entry signals, right? These are more than confirmations. These are saying the market has chosen a side and is going to go this way, right? So a break of structure literally means that the market was moving sideways. There was no clear direction, and then it chose a side, and this was the candle that it chose on, right? So when you guys are getting into these trades, it's not always going to be a setup at the time that you look into the market, right? Every single time you log in, you're not going to see a perfect setup. That's why it's nice to have multiple things that you trade, because or to be able to understand the importance of looking at the market on multiple time frames, because there's going to be an opportunity somewhere. Like the market is open 24 hours a day, 7 days a week. There's going to be an opportunity somewhere. So don't feel pressure if you don't see everything you need. Here's another great example. If we would have came into the market at this time, and we could see that the market was, I gotta fast forward, and we could see that the market was consolidating. We see that the market was consolidating here for some time, and this is the hour time frame. And then we had a break of structure to the upside, right? The candles were already above the EMA, so that's one confirmation we needed. Even though you probably felt like you were seeing some liquidity here, you wait for that break of structure. That's telling you it's okay to get into that trade. Not only that, we had the momentum line facing up, and we had the blue line cross over the orange line, and it crossed above the 50% line. So these EMAs really tell you a lot. And I'm not dropping trades in the chat 24/7 because it's not always an opportunity 24/7, right? And you shouldn't feel pressure to trade because you will find something, just not every time. So here's another really good example of how to use the EMA. We see the market was consolidating. Right? It broke structure. And let me just go back a little bit. Do this again. We see the market was consolidating here. It broke structure with this candle. And even though it's minor, it crossed below the EMA, right? It crossed below the EMA. Not only that, we already had our momentum line facing down and below zero. We had our stochastic facing down. We had the orange above the blue. And it crossed below the 50% line, confirming the trend for a sell, right? And this may look like a quick sell, but it really wasn't because the market dropped all the way down here, right? So if this is making sense to you guys, drop a 7 in the chat. If you have any questions, drop your questions in the chat now, and I will answer it. Okay, you guys said it's making sense. Perfect. All right, perfect. So the last thing I'll say about the EMA is if you get confused about consolidation, look for what your other indicators are telling you. If you see that the market was previously above the EMA, right, but nothing was really happening, and then it crosses down and then it starts to consolidate below, just know that a selling trend is starting, right? When candles cross down and they start to consolidate below, just look for a sell, right? A lot of us really mess up in our trades because we overthink it. But it's just as simple as not overthinking when you're driving. You know that a red light means stop. You know, a yellow light means slow down. You know, a green light means go. For trades, you're asking yourself these basic questions. And if the conditions are not met, just simply don't take the trade. And again, vice versa, if you were to see that the candle started to consolidate, I'm looking for a good example. Okay, let's just say here's a good example. The market was below, right? So you may be thinking, oh, candles are below the EMA. My MOM is facing down. My stochastic is like, don't get confused. Wait for, we can see the structure was broken here. Candle started to consolidate above the EMA. And then the market actually went up. All right, so we have a question in the chat. And Padma says, I am still confused about what time frame charts I'm looking at. Start at 1 week and 1 day and then move down to 1 hour and 15 minutes. Yeah, pretty much. And let me try to find a chart. Maybe I'm gonna try to find a good example of why that's relevant. But these markets have been moving a little crazy this week. So we'll start with Euro USD. All right, perfect. We'll just do Euro USD. I'm gonna do this example of, it's gonna be a little bit of a sidebar, but not really. Looking at it on higher time frames and trying to find your entry. So that's what we're going to focus on right now. So let's just say we were looking to look for a Euro USD trade for tonight. We can see that what has happened, y'all, based on what we just talked about, two things just happened. The market has broke structure plus the candle has crossed above the EMA, right? Plus, we can see that our momentum is facing up. It's not quite above zero yet, but it's facing up. And we can also see that our stochastic is facing up. So on the week, we can see that the trend for Euro USD is an uptrend, right? We can see, even if we look at this was a high, this was a higher high, this was a higher high. We can see the shape and we can see more green candles. If you guys can see that Euro USD is buying for the week, just drop a 7 in the chat. And then we're going to move down to the next time frame. Okay. Now, since we noticed this, what we can do, and I'll just use Tradingview has all these free tools over here, but I'm just going to use a simple rectangle. And what I'm going to do is I can see that this candle for the week, before it started, this was the consolidation, right? It was stuck in this area for, remember, this is the weeks. So for 3 weeks, it was stuck in this area until it broke structure. So what I'm going to do is I'm simply going to put this bar right here, right? Just to let me know that this is a buying zone, right? So I'm not going to enter the trade yet, because for me to wait for the market to come down from 1.12 to 309, it's just too much. It's just not going to happen that fast. So now what I can do is look at the 4-hour time frame, right? So then I'm going to reset my chart, and I'm going to zoom out a little bit. So when I look at the 4-hour time frame, right, I can see that I'm still getting the same buy confirmations. Now, this is just highlighted from the weekly. So I still have my candle above the EMA, is way above the EMA. I still have my MOM facing up, and I still have my stochastic facing up. So it's still some confirmations for the buy, but on the 4-hour, we can see that this was a previous high. I'm trying to circle it. We can see this was a previous high, and this was a higher high. So the buying trend is still confirmed, but if you wanted to, and I do, and while you're learning, you can never have too many notes on your chart. We would just add another level of support right here. Right? And why are we adding another level of support right here? Because we can see that the market had a hard time getting lower than this, and then it went up. The market is currently having a hard time getting lower than this, and it's still going up. So I just added another bar at my level of support on the weekly. Because remember, we're looking at the same chart, just on different time frames, right? So for now, it's still looking like a buy. And again, we can go down to the 1 hour. And on the 1 hour, you can zoom out, but you're just looking at the same stuff. You can still see that this is, and I'm going to just zoom out as much as I can till I get to the next level. We can see that this is a valid area of support, and the potential place that it could be going is here, right? Because the market hasn't been this high in a while. And the reason why I chose it to go there is because if this is an uptrend, right, based on what we talked about earlier, it should be trying to break a previous high. So the next high that it's going after is this high, right? If that makes sense so far, just drop a MS in the chat, y'all. We still have not entered this trade yet, but we're just trying to figure out, okay, is it going to buy, and is it going to go to the next target? Now, when you're trading, it's all about previous highs and previous lows. So if you're going for a buy, that's how you're going to want to know you know that your TP is going to be at a previous high, right? And if you can't see a previous high anywhere down here, it's because it surpassed it and it's created a new high and it's trying to revisit a previous area. So let me just zoom back in. And then if I go down to the 15-minute, perfect. Now, we've confirmed on multiple time frames that this market is going up, right? What we would want to do is set a pending order for once the market comes back down to this zone. Our entry will be in this zone, and then our TP will be at that previous high that we just saw. Huh? This market dropped a lot of pips since Friday. That's like a lot of pips. That's a lot. So yeah, pretty much that's why you want to look at it on multiple time frames, because you're just trying to see what the overall trend is and where you can get an entry. Because let's just say the market sold and it went past this point. We know that the next entry point is going to be here. So it's going to come back down to this entry point, and then it's going to go to that previous high if it's a buying trend like we are predicting it to be. So does that make sense, Padma? Why you want to look at it on different time frames? And we could do this with another currency pair as well. But you're pretty much just trying to figure out what is the trend on the weekly, and then what is your best opportunity to get in. Because even when we zoom out, we can see, I think this is the 4 hour. We can see that the market broke all of those highs, and now it moved into a new zone. So it's either going to try to hit TP back to where it was, right? Or it's going to come down. And again, if you're going for a sell, it's just pretty much going to be the opposite. So all right, cool. I talked a lot about the EMA. Do you guys have any questions about the EMA? Because now I'm going to talk a little bit about the momentum in stochastic, and then we're going to wrap it up, just so I don't keep you guys here forever. Do we do this every time we are looking to make an entry? I mean, once your charts are marked up, they'll just be marked up. So let me see if I have any old notes up here from any of these things. Okay. So for example, right here, I already had these lines for my NZD USD chart. I didn't have to do anything else. So based on the confirmations, this line that I put here is either going to be a resistance line or it's going to be a support based on what the market is currently doing. So personally, I do like to look at the market with fresh eyes every time. But if you already did the work, let's see if I have notes on this chart. Yeah, I have a support line right here. As we can see, Bitcoin actually crossed above this line and it went up. So if you already have stuff on your chart, oh, here's some more stuff for US 30. This is just another example. If US 30 is here, it was selling, and I have confirmations for a sell, which I do. I know that this red line right here will be my TP1 for a sell, because that's a previous place that it visited. And if it continues to sell, this will be my TP2, and this will be my TP3. But these are previous notes that I've taken on the chart, because the market is always going to revisit and do the same thing. So just take notes every time you're on your chart. Tradingview has all these amazing things. So you literally can make your charts as custom as you want. Like you can, oh, they literally just changed these emojis, but you can add so much stuff to your chart. Like if you think this is a great idea, yep, that was a great idea for a buy. You can put another one here. That was a great idea for a buy. Like your chart can be so custom, and once it's written, and you can say, great area, right? Great area to buy. And then every time the market comes to that area, you don't have to do anything else because you already took your notes on the chart. So I hope that answered your question, JW. And Bridget said, what should our EMA settings be on MT4? Well, on my MT4, I have a 50 EMA, I have a 200 EMA, and I also use the Bollinger Bands. Y'all love annotations too. It's just so much fun. Like, it's just fun. Like, trading really does not have to be boring, y'all. You can really get jiggy with it, and it just make it so fun. Like, some people actually be making whole, I think I showed y'all this on my in-depth intro to Tradingview video, where some people actually make artistic, they be making whole characters. Like if I wanted to put a face right there and be like, this is my head and shoulders design. Exactly. That's how, if you guys ever been in IM Academy, there was an educator named Orrin Wright, and his charts used to be so animated that he actually made education really, really fun. So I try to do the same thing. Some previous stories I've used was the apartment buildings and the tenants, and also the driving when I'm talking about the Bollinger Bands. So, all right, cool. So I think I talked a lot. Do y'all have any questions? I'm only going to keep talking till 8 o'clock. I'm going to cover as much as I can about the EMA and stochastic in that time. Then I'll leave some room for questions, and then we'll wrap it up for today. All right, so we got some tips and tricks about the EMA. It's just such a helpful indicator. I like to do my analysis on every time frame just to give me the best possible like information. but I typically take my entries on the 1 hour chart. I'll take my entries on the 1 hour chart because most indicators and strategies are formatted to be used with the 1 hour, but they're also flexible to be used on other time frames as well. So, all right, I'm gonna leave the MOM out for now, and we'll talk about the stochastic because that one has a lot more things that I could say about it. And I also have 2 separate videos on the stochastic as an indicator and also as an entry signal. So you guys can check that out as well. How long are your trades? How long are your trades usually last if the market's going sideways? It really depends because if we look at, let's just say I entered the trade for a buy right here. Let's just say I entered the trade for a buy right here. The market didn't actually break structure and decide to buy until this candle. So from here to there, and this is another tool that y'all can use that's helpful for questions like this. If you click the line tab, the trend line tab, and then you click info line, I can actually drag my line from here to there, and I can see exactly how that was. So 14 hours. It took 14 hours for this trade to break out. However, depending on whatever my risk was, if I actually waited for that trade to break out, right, in 14 hours, in another 18 hours, that would have been 102 pips. Now, if I'm risking $2 in this trade, I would have made $200 in about a day or so just from waiting for that break of structure. That's why it's important to wait for your signal. So it really just depends on how long, like what's going on, what's happening in the news, and stuff like that. So that's why it's important to check the news because Euro USD was just really breaking highs from 2022, and it just kept breaking highs, and the news was very reflective of that. So all right, y'all, last indicator we're gonna talk a little bit in depth about. And again, you're welcome. And again, feel free to ask your questions in the chat. We're gonna talk about the stochastic. The stochastic, it tells you a lot. So let me just zoom in. And let me make this a little thicker because I can't really see it. All right, there we go. Oh wait. Sorry, y'all. I just want y'all to really see this. There we go. So the stochastic oscillator, it looks like something that somebody's kid drew, right? It just looked like a scribble scrabble sum. It looks like nothing serious, but this indicator can actually help make us a lot of money just based on the things that it's telling us about the market. So before we actually zoom out and see the candles, we're going to talk about what are we actually looking at here. So we see 2 lines. The blue line is considered the fast line, but I typically just call it the buy line because blue is associated with buyers. And this orange line is considered the slow line, and I usually just associate that with the sellers. Now, what you're going to see is at any given time, these lines are going to be doing a dance, right? They're either going to be right on top of each other, right? One is going to be overpowering the other. Like one is always going to be on top and one is always going to be on the bottom. So and you can even change the color. Let me just actually change it so the description is just more fitting. I'm just going to change my D line to red because we're going to keep blue with buyers and red with sellers. Or you can even change your other line green. So when this line is in the middle, right, in the shaded area, no matter where it's at, price is pretty consistent, right? It's not really overbought or oversold, right? That means that it's equal buyers and sellers in the market. The market is most likely moving sideways, or depending on what else is happening with these lines, that's going to tell you what's happening with the market. So when it's in the blue area, I just like to call this is like the safe zone. It's not really until the market gets close to this dotted line, or this dotted line, that major changes are happening in the market. So with any indicator, whenever you see that the market has crossed up, right, that is a sign of a reversal, right? And the more we trade, we really have to Blue area, it's not really consolidation. It's more so like it's just going steady. Like whatever it's doing, that's what it's going to be doing until it starts to approach a line. And maybe I should zoom out so you can see the candles simultaneous. It's not really consolidation. It's just the market is just doing what it's doing at that time. So when I'm using the stochastic as an indicator, I'm not really trying to make any moves until the market is approaching either my 80% line, which is at the top. If it's approaching my 50% line, or if it's approaching this 20% line. Now, it could be doing anything around these lines, but these are the lines where you're going to see the most activity. So, for example, and let me just get a vertical line just so we can pay attention to the same candle and we could just make it make sense, right? And I'll just do a few candles where I'm going to only be highlighting areas where the market is near a dotted line, so that you guys can, because the more you know, the easier it gets, right? Okay. So we just going to look at these examples. So in this example, we can see that the stochastic is two things happening. We see the blue is above the orange, right? The blue is above the red, right? The buyers are above the sellers, right? So that's one confirmation for a buy. Now, we can see that the blue line has also crossed above the 80% line, right? So anytime it's crossing up or near one of these lines, that's telling you that some dramatic action is happening, right? Even if we would have took the trade at the previous candle, we can still see that it went up for a buy. So that was telling you that, okay, it crossed up, it's going to continue to buy. Here's an example here, right? Even though it was a green candle, we can see that the red line overtook the blue line, right? And that the market crossed back down below the 80% line. And then we had some selling here, right? It looks small, but that's a good amount of pips, right? Here, what do we see? And again, the candle may look a little sketchy, but if you are okay with what you're looking at, it's not going to be that confusing. So we can see this candle was wicky at the top and at the bottom. But what do we have? We have the market. The blue has taken over the red line, and it has crossed back up above the dotted line. What do we have? The start of a buying trend, right? Look here. The red is over the blue. It has crossed below the 50% line. What do we have? A selling trend. Here's another one. We have a strong green candle. This is considered a fake out. The market's not going up. It lied. How do we know? The line has crossed back down below the 80% line. So the stochastic tells you a lot, right? It tells you if the blue line is on top of the orange line or the red line, most likely it's a buying momentum. It's telling you anytime. Here's another example, right? You like, once you see this, you can't unsee it. The blue line, it was consolidating, right? It was a straight line. It was on top of each other. It was consolidating. What do we have? We have a break of structure. We have a cross up. The blue crossed over the red line. Finally, the market decided. Plus, the market crossed above the 20% line. What do we have? A buying trend, right? So it's really pretty straightforward. I will highly recommend that you guys watch additional videos about the stochastic because I can really talk about it for an hour. They have 500-page books just on the stochastic. So it's a lot of information. And I have two videos. One's like 15 minutes and the other one's like 6 minutes, but it does give you more detail. We have another question in the chat. So when it crosses up and stays up top or below for a while, that's a breakout. Well, technically, yes. Whenever the stochastic crosses above any line, it's a confirmation that the reversal, it's a reversal. So we can see that the market was it's a reversal or decided. So we can see right here, the market was consolidating, right? Then we can see, well, it was consolidating, so we wouldn't even take any trade at that time. But we can see once the market officially crossed back up, that's when the buying trend officially started. So the cross up is not just a confirmation, it's actually a signal. Here's another one. It crossed back down, we had a minor selling trend. It's a signal. So if you're waiting, even like, and don't get faked out by this, because the market, sorry, I'm just drawing on the screen. The market can look like it's about to cross down and then keep going up. That's a fake out. Just wait for the actual cross down. Just wait for it to actually cross, and you will get what you are looking for. And we can go back, we can look at another pair, and we can see similar instances of this happening. So here's an example. Like, we see the cross down. We see the selling. Here's another one. We see the cross down. We see the selling. Right? So does that make sense, JW? You said when it crosses above 80. Hold on, let me read your question again. So when it crosses and stays up top or below for a while, that's a breakout. Yeah, if it has the breaker structure, sorry,
like those times where it's like it's sitting up above the 80, for like a good amount of time, like an hour, like, and I would hit a rollover, but it's still sitting up there. That's a breakout.
yeah, exactly. That's considered a breakout, because all right, and this is one thing I'll say about the stochastic. When the line has crossed above at the top, when it's crossed above the 80, the market is considered overbought, and it's inevitable that it will sell. But I tell you guys this all the time. Don't trade what you want, trade what you see. If it hasn't crossed back down into the safe zone, it's a high potential that it's going to keep buying. And we saw this over this past last week. We saw this with all the USD pairs. A couple of weeks ago, we saw this with the JPY pairs. Although it was overbought or oversold, it continued to go that direction, because again, that's one of the confirmations. Is it above this line? Yes, buy.
Well, I mean, I guess for me, I've seen it cross, but then it continued to go up after it crossed. So like it faked me out like twice.
So what do you mean? Like, if it crossed, it continued to go up?
Well, I mean, like in real time, I saw it cross, and then it continued to go up when I thought it was gonna go back down. So, I didn't know if I was reading something wrong or
Do you remember how many other confirmations you had at the time? Because remember, you still need at least 3 to 4
I wasn't
other
even
confirmations.
measuring confirmation, but I probably didn't have them. So.
Yeah, just make sure you're checking, because again, you don't want to kind of be sure on the trade. You want everything to go in your favor, because there's so many instances where that could happen. For example, if we wait, we could have took this trade. Like, if we would have took this trade, we had everything let me turn this back on too. And this is just an example. This trade has everything we need. It's nothing that we can debate about this trade. We have the cross down. We have it under both EMAs. We have the MOM facing down below 0. We also have, this is actually what you're talking about now. We see it cross down, and it didn't cross back up yet. And it won't start buying until it crosses back up. So if you have a surefire trade with all your confirmations, the trade is going to go in your favor. But if you have a trade that has iffy confirmations, it's just don't take the trade. Like, all of this entire area right here, was iffy. Nothing really was giving me all the confirmation that I needed to take the trade in any way. Like, it's iffy. And another thing is, and this is why I like to use 2 EMAs also. If the candle is between 2 EMAs, that's another sign of consolidation. Just don't trade. Wait for something. Because you see, if we would have just waited until, what do we have? Break of structure on the downside. Then what do we have? A lot of selling momentum. It's like sometimes you just got to wait, or look at something else. Like, because the market will fake you out. But if everything is in your favor, it's like, it's hard to lose, because you're just essentially checking stuff off a box. Look at this. Candles. We had a consolidation. We had break of structure on the upside, candles above the EMAs. MOM facing up, stochastic facing up, crosses above 820, crosses above 50, crosses above. Look at that buying momentum. It's like if you literally are just using the checklist, it takes a lot of the guesswork out of it. And then the more you trade, it's like driving. The more you can start to use your feelings in your trades, and along with the technical analysis. So it's not hard. It's just a lot of repetition. And once you figure out which rules you want to follow, which indicators you want to use, what makes the most sense, I promise y'all, it becomes easier like every single day. It takes a lot of the guesswork out of it. So I'm gonna stop talking now, y'all, because I've been talking for like 3 hours. But if you guys have any questions about anything we did so far, I am going to be dropping trade ideas in the chat. We can look at GU right now, and you guys tell me what GU is looking like to y'all. Does GU look like a buy, a sell, or a wait? And if we're waiting, what are we waiting for? Y'all can let me know in the chat if it's a buy, a sell, or a wait. And if it's a wait, what are we waiting for? Okay, it's a wait. Then what are we waiting for, y'all? Anybody can answer. Okay, everybody said wait. Blue line to cross to the red. Okay, yep, that's one. Yep. That would be if we were going for a buy. Cross up above 50. Okay, yep, that's super safe. You can wait for it to cross 20, but it'll still be below the 50. That's another trick, y'all. Like, it can cross above the 20, but it's even safer up here. That's just telling you it's a reversal, but you got to really be patient to wait. So that's a good answer. So yep, guys, you know what you're looking for. Don't get scared just because you see something like this. You see it's red. It can always turn around, because that could be a level of support. It could always turn around for a buy, because remember, it's still above the EMA. This is still above 0, and this is still above the 50, even though it's crossing down. So wait was the correct answer. You guys can come back in an hour and just to see what this candle has decided to do, because if this crosses up, right, like Padma and Kayla said, and if this candle breaks structure out of the out of the consolidation, we'll know that this market is going for a buy. Plus, the market just opened at 5:00 p.m. It's still getting its common sense and life together. I typically don't drop trades until like 9:00 on Sundays, if you noticed, because I really want to see what's going on. But I really hope that this was helpful, y'all. This is called equal lows. Yep, pretty much. It's just called like liquidity. There's actually a candle pattern called double bottom. So once you see that the market starts to literally, it can happen 2 times. Like here, we had a double bottom, market went up. Here's another one, double bottom, market went up. Here's another one, double bottom, market went up. Here's another one, double bottom, market went up. It's like knowing candle patterns really helps. So yes, once you see those equal lows, it is a sign that you can get into the trade. So we do have the equal lows here, like Padma pointed out. We also have the consolidation above the EMA. And remember what that means, guys. Potential buy. Right now, personally, I would just be waiting for the cross up, and I will also be waiting for the break of structure before I felt comfortable to take this trade. But I know we don't all trade the same things. Y'all know my focus recently has been the USD pairs. But if you trade anything else, you can look at the JPYs, you can look at the AUDs. Look at this beautiful sell opportunity. So beautiful. Look at this crossover. It's just so wonderful. Like once you see it, you can't unsee it, y'all. You just can't unsee it. I'm happy you didn't miss class either. So let me really stop talking, because I'll just keep talking. All right, guys. Last call for questions. And then we're going to pack it up for today. And I'll post this in the chat as soon as it finishes processing. I'll give you guys about 30 seconds to ask your last minute questions.
Chatter, just a quick question. I put in a chat, but you might not have seen it. On the stochastic, those 3 lines, how do you get it on there? For some reason, mine is not on there.
All right, let me see. It should be automatic, but I just changed the thickness and the color. So for the stochastic, that'll be your upper band, middle band, and lower band. So it's gray right now, but I just made mine black and I made the thickness on 2. Let me know if you see it.
Okay, I'll take a look at my computer and double check it to see, but I took a picture.
Okay, are you on your tablet or your phone?
I am on my tablet right now. My computer is charging. That's why I look at the charts. But I can check it. If anything, I can message you.
Okay, yeah, because to get to the settings is a little bit different on the phone. But yeah, if you do have questions, you can message me. I am going to be dropping some trade ideas in the chat right now. The USD pair is a little bit weird because they was just on such a buying momentum last week, so it's going to be a little bit time for them to level out. But we will be looking at other stuff, and of course, you guys can take whatever trade you want. You don't have to wait for me. And I think that's really all I have to say for today. So, all right. So I will catch y'all in the chat. Everybody has my number if you need me, and I will see y'all. I'll let y'all know what time our session is tomorrow. So, good night, y'all. Thank y'all. Thank y'all very much. Good night.